Hey traders, welcome back. This is our weekly market trading preview for the week of Monday, September the 12th. Let's go ahead and jump into it here. Interesting week this week ahead of us. We do have some news catalysts that could be potentially beneficial for us. As traders, that's all we really can look for is opportunity. And I think we're going to have some of those setups for us this week. Some interesting things taking place this week as we take a look at it. This is our technical analyses matrix that we look at on a weekly basis. Now we look at this on a intraday or daily basis as we trade day to day. But it's interesting. This is the first time in a little bit that we have had that we flipped back to bullish on the weekly basis. And here we are today, Monday, September the 12th. We're back to neutral rating on the daily basis. So the weekly basis here, we have flipped back to bullish. Daily basis, we are now in a neutral rating. I hate the neutral rating days. You will see that the market abhors a vacuum. I always talk about that, and you will see the vacuum that I'm going to be pointing out here in just a second. So could be a potentially tricky day to trade today. We'll just have to see how it develops. This is kind of what I'm looking at for the market right now. Obviously, the MACD and stochastics, they're the old standbys, but the ultimate oscillator is a big one for me. I really like that setup in terms of determining market direction. You can see we've had just almost another parabolic move right here. We are, though, entering into an area, and it's just down below that 4,100 level on a Fibonacci that might be a little bit of resistance here for this market. As I speak right now, the futures are up almost 20 points. We're pushing up very, very close to this level. So it will be interesting to see how that develops. From the past weeks at price activity, key support levels that I look at and use. The SPY closed at about 406.60, up almost 4% on the week. It lifting off of the previous pivot low support levels down in here that I've got lined out. Bullish engulfing candle, which is very bullish, created on the weekly time frame, and it does suggest that we do have some further upside. So I'm going to be watching zones of interest above that for potential resistance. I think that we are in a micro bull run right now, and that we're going to be looking for resistance levels to get into our next shorting position. Not that much different from with the Qs. Qs were up a whopping 4% on the week as well, and they did lift off of that pivot point that we talk about so often, and gave us a bullish engulfing candle once again, which is very positive for the marketplace. So I do think that we will be pushing a little bit higher here, and really during that time frame looking for the next resistance levels, looking for the next areas to be able to short this market. Monthly sector rotation, you can see it's real estate, and that's probably no surprise that real estate has been beaten up something fierce right here, and probably sort of an interesting area that really communications have been one of the stronger areas, but consumer discretionary is really the one that is outperforming the most. So generally speaking, in a broader sense and a broader term, when we talk about sector rotation trading strategies, it would be something along the lines of looking at going long real estate and going short consumer discretionary. The heat map for the 1 week period from last week, not really a surprise when the market's up 3 or 4% in the week, but pretty much across the board we had strength. And it is interesting that we still have a little bit of red here and there, but overall it was a pretty positive week for the marketplace. You can see, again, the SPY and the Qs up strong. The Russell was up strong. The Dow was a little bit flatter, but overall just a good solid positive week last week for all of the major indices. Now, one of the things that we do look at is the put-call ratio. It's an indicator that shows put volume relative to call volume. Puts are often used to hedge against a market's weakness or bet on a decline. Call options are used to hedge against market strength or bet on an advance. So the put-call ratio is above 1 when put volume exceeds call volume. It's below 1 when call volume exceeds put volume. So it's just a simple way to gauge market sentiment. It is part of the fear indicator that we look at here as well. It's one of those components, but we like to break it out separately. So sentiment, again, is deemed excessively bearish when the put-call ratio is at a high level and excessively bullish when it is at a low level. Well, we're pretty much flat right now. We're currently at 0.94, so it's pretty much neutral rate right now in terms of rating. We do look at what we call the pain index or open gamma index. This is where you can see the open interest on all of the different strike prices that we are looking at on the S&P. Obviously, the 4,000 level is a big level. The 4,100 level, big level, 4,155, and then 4,200. So these are all the magnets. These are all the areas of clustered interest in the marketplace. And that's something that helps us determine sort of, where we want to put our strikes relative to where everybody else is putting their strikes and where the levels of interest lie. The S&P expected move for last week was 97 points, and for this week, this coming week, 94.17. And so we'll have to see, the days of maybe the 140, 150 point expected moves might be gone, but we're still up there high enough that we should have some good IV, some good premium to trade with. You can see on a heat map here what I'm talking about when I say a vacuum. There's not a lot of pressure here inside of this heat map right here. You can see that we do have a pretty open window to run all the way up here almost to 4,200. 4,200, of course, would be the next really big level of or wall of resistance in this marketplace. But we're quickly approaching 40.95, just below 4,100 right now. I'm looking at the futures right now as I speak, up 20 points. 40.87 is where the E-minis are. So we're going to be probably testing this area right now today on Monday. And of course, the key will be to see, do we back off of it or do we continue to push higher? We do look at the fear and greed sentiment reading. It does give us sort of a idea of what is happening in the market in terms of sentiment. There's a lot of things that go into this component. You can read those on your own here. But if we do look at it, we're pretty much still on neutral rating. Not a lot of change here from the previous close or from a week ago. So it's interesting that we're just kind of back to a neutral rating on our technical indicators. We're back to a neutral rating on our put-call ratio. We're back to a neutral rating on the fear-greed index. That usually means A, that you get some pretty choppy trading, and B, that the market is setting up for a big move. Both of those things make it very tricky for a trader. So we generally like to trade small on days like today. Trading ideas for today. Well, there's a couple of things to think about today. Today's obviously a busy day. We do have GDP estimates coming out of the UK this morning. That might be potentially market moving. Of course, Mondays are always busy for us. We have our 0 DTE index trade that we will reinitiate. We have our IWM weekly credit strangle, which we were able to just squeeze out of last week at a very slim profit, which is awesome. We'll restart that today. We do have a 40 TE SPY trade that we rolled from Friday, so we'll be continuing to work on that today. We'll initiate a new Q trade today, PayPal Credit Strangle, and then we have the long ES cover that I've been working since I don't know when. Wednesday, Thursday of last week, I guess Thursday or Friday of last week, but it's been a really, really great trade. We've brought in about $1,700 in income off of that trade so far. It's looking really solid today, and my goal would be to bring in another $200 to $300 on it today. So we'll be working that in addition today to all of the other things that we have going on. Potential bonus trades that we're looking at. We got to work on a better name for this trade, but I just call it the $100 pillow trade. Hopefully you wake up in the morning, you got $100 underneath your pillow. We had that here already today. We initiated this overnight index trade on Sunday evening, and it's already booked a profit for us. So we're already starting today, Monday, with $100 in our pocket. We will most likely reinitiate that trade once again tonight as we go forward. Tuesday, we have the UK unemployment rate coming out, as well as US CPI numbers. That CPI report for the United States is potentially a decent scalping opportunity. And so I will open up the scalping room for us once again here early in the morning on Tuesday, well before we usually start our Zoom sessions. And if there's something to scalp, then we'll scalp it and see if we can get maybe $500 or so into our pocket before we start the day. We will, of course, on Tuesday have another butterfly trade. Tuesdays and Thursdays, we really try to focus on getting a 0 DTE into the butterfly. A butterfly into the 0 DTE trade. So we'll try to focus on those on Tuesday. We do have the scalping room running on Tuesday, full live Zoom feed there in the scalping room. But as I said, we will be looking to scalp the CPI numbers here in the main room. So we'll see what we can get out of that on Tuesday. Once again, looking for an overnight bonus trade with the E-minis. See if we can drop $100 in our pocket. Wednesday, we have in the UK, we have the UK CPI numbers coming out, as well as crude oil inventory. And so both of those could be market moving for us. We have on the schedule for Wednesday another 0 DTE index trade. Of course, we will be adding a new ladder to our oil trade this coming Wednesday. So look forward to that. And then once again, an overnight index trade. See if we can put another $100 in our pocket. That's been just a absolutely wonderful trade. Thursday, we've got a whole bunch of catalysts that could potentially give us some trading opportunities. We've got Utah, the retail sales numbers, jobless claims, and industrial production all coming out in the morning. Those could all be market movers. So we'll be looking at a 0 DTE and maybe not necessarily starting with a butterfly, but definitely getting a butterfly integrated into our 0 DTE on Thursday. Of course, we'll be in the scalping room all day long with a live Zoom feed there. We will be here in the main room adding a new ladder to our gold trade. Going to be talking about the gold trade here a little bit more in depth here this morning in our Zoom feed. So be ready for that. I think you're going to like that. We're going to look at doing a new dragonfly trade and a new bear market trade on Thursday this week, as well as the overnight index trade, which should hopefully drop another $100 into our wallet as we sleep. Friday's trade action, we do have the Michigan Sentiment Index coming out. Sometimes that moves the market a little bit. Sometimes it doesn't. But of course, we'll be focusing on our index trade, our 0 DTE index trade. And that's really all we focus on Friday. We don't have too much else going on Friday. because there is always the potential as the week progresses that we have existing trades that need work, need adjusting, need enhancing, and we use that day on Friday to usually get that done. So probably no potential bonus trades, although you never know. You never know. We might carry something over the weekend. Our updated performance results, I won't take the time here to go into these too in depth. You can pause the video if you would like, but man, suffice it to say, we're killing it. I don't know how else to put it, but we're doing pretty well. We're doing pretty well with our trades. So it looks like a solid year, and we're hopeful that we can continue that winning streak. Some links of support for all of you. You make sure, number one, that you are subscribed to the YouTube channel and that you have hit the notifications bell so that you get notified when we put new stuff up. I'm taking a look here right now at my computer, and I'm probably going to be working on a video for you all tonight on the put call ratio index, and talking about that and how it works and what we do with it. So again, make sure that you're hitting the notification bell so that you get notified. Twitter is always a great way to communicate with me. And I do try to put some trading information up every day on the Twitter feed as well. You can always email me if you need to, and you can join our private Facebook group if you haven't already. Just search Trading with Scott and it should pull up for you. So those are some things to help you communicate with me if you need to. As always, I appreciate you guys. I do believe in Zig Ziglar's saying. It's one of my biggest mantras in life. You can get everything in life you want if you help enough other people get what they want. And so I'm grateful for you guys. That's sort of our market plan for this week, guys. We will see you in the live trading room literally in a little over 2 hours. Oh, by the way, if you are not a member of our live trading room and you want to get a free 1 week access to check it out, see how we trade, talk with us, etc., etc. I'll drop a link in the description box for you. It's a pretty no-brainer opportunity. Jump in for free for 1 week. If you like it, subscribe for a month. If you get to the end of the month and you don't think it was an absolute life-changing opportunity, if you don't think it was the best trading room you've ever seen, and you follow all of the things that we ask you to do as a trader, I'll give you 200% back on your monthly subscription. Thanks, guys. We'll see you soon.